Good morning, everybody. It's Thursday, February 20th, 5:24 a.m. Central Time. Grain markets are higher this morning. March corn futures up 4 cents at 501 and a half. March soybeans up 5 and a quarter at 1037. March Chicago wheat up 1.5 at 593 and a half. March Kansas City wheat is up 4 at 617 and 3/4. March spring wheat up 9 and a quarter at 642 and 3/4. We've got a heat wave in Argentina. Let's start there.
So warm temperatures are forecast for Argentina. According to the Buenos Aires Grains Exchange, the nation's key farming areas could see temperatures as high as 95 degrees Fahrenheit in the coming days. Scattered rainfall is expected to return early next week, with some areas potentially receiving up to an inch of rain. The country's corn and soybean crops received crucial rainfall earlier this week. The exchange is estimating Argentina's soybean crop at 49.6 million metric tons and the corn crop at 49 million metric tons.
The heat is absolutely on the way, and there are actually some areas, the way that the forecast looks, that will be in excess of 100 degrees for 4 or 5 days straight. And there's not going to be much rainfall during this time frame, the next, call it 5 to 7 days. Looking at the rainfall situation in the southeast, soybean and corn areas, I guess you'll see a little bit of rain, but then you go to the 5 to 10 and it really opens up again. So you're looking at 5 to maybe 7 days of hot and dry weather in Argentina. Is that enough to really set back the crop? I don't know. They've had some moisture problems. They started off hot and dry, then they caught some rains, and now they're going back to hot and dry, at least for a week, the way that it seems. So I wouldn't be surprised to see further production cuts here. And that rain that's in the forecast a week out, I mean, that's just a forecast. That doesn't have to be reality necessarily. So I think this could have something to do with, I'm not going to call it a soybean rally, but the fact that soybean prices have been able to hold together at these sort of levels, despite everything we know about the global supply and demand situation. Let's go to Brazil, where we've also got some weather issues.
Agroconsult cut its estimate for Brazil's soybean harvest following its annual crop tour. The consulting group estimates the crop at 171.3 million metric tons, down from its January forecast of 172.4. The cut was primarily due to drought in southern Brazil, along with other weather-related challenges. However, an anticipated excellent crop in other states, such as Mato Grosso, is expected to offset losses. Even with the reduction, Brazil's soybean crop is expected to be about 10% larger than last season.
If you take a look at rainfall over the last 60 days, this is a great map from our friends at Crop Profit. The dry conditions in the south are very real. Rio Grande do Sul saw only 59% of its normal rainfall over the last 60 days. So, yeah, absolutely, there's going to be some crop losses down there. Looking at the forecast, still kind of dry in the south. Your second corn areas, which are further north, are going to see mostly normal rainfall over the next 14 days, the way that it looks. So I don't see any big weather threat there. Here's Brazil plus Argentina soybean production. I think if I had to guess today, I'd say USDA is pretty close with Brazil at 169 million. And maybe this Argentina number at 49 comes down. But I think in any case, you're going to be left with a situation where the combined crops for the two countries are record large and probably by a fairly wide margin, which leaves you with this, your world soybean ending stock situation. USDA indicates, as of its most recent report, that ending stocks of soybeans around the world at the end of the marketing year are going to be larger than the size of 1 year's worth of U.S. production, which is there's just too many soybeans. I'll tell you this, though, we're pretty much done with the Brazilian growing season. We know what it is, I think, to some degree, and the market's going to move on to trading other things. We're going to move on to trading the new crop situation, U.S. acres, South America production next year, demand, that sort of stuff. I threw this together this morning. Corn production in South America does matter, but it's not overly substantial relative to the U.S. and relative to China. The U.S. is going to account for 31% of global corn production this year, or has accounted for. And then you've got China's number 2 at 24%. Brazil's only about 10%, and Argentina's only about 4%. But Brazil, even though they're only 10.4% of global production, according to USDA, that's based on their estimates, they're a big exporter, and they're going to provide us with some export competition, and that's why they matter. It's not because they're the biggest producer. It's because they're probably our biggest competitor on the export market.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about some of our recent premium videos?
I did about 45 minutes with Matt Bennett yesterday. We do 20 questions with Matt every other Wednesday, and it really turns into like 35 or 40 questions. These are questions that come in from our premium subscribers, which means that they're super topical. So these are questions that come in from farmers all over the country. We talked about acreage. We talked about marketing. We talked about the cash market. We talked about basis, a number of different things addressed in, again, I think it was like 35 questions. I did a grain marketing for beginners type video earlier in the week, futures versus HTAs, advantages versus disadvantages for both types of contracts. And if you're just starting with grain marketing, or maybe you're more experienced, maybe this would be a good refresher course for you. In today's video, I'm going to talk about U.S. soybean acreage loss and the balance sheet implications. I was looking at this a little bit more closely yesterday, and I think it's super interesting. This will be out later today, so if you're a premium sub, no, you didn't miss it. It'll be out at 10 a.m. Central Time. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. It's a $50 per month subscription. Cancel at any time. No other fee, no other obligation. Nobody will try to sell you anything else. You'll get 2 emails per day from us, one at 5 a.m. Central Time. That's the Standard Grain Morning Update, which includes everything, 6 most recent premium videos, charts, graphics, headlines, all of my cash grain marketing recommendations. The 10 a.m. email blast is that day's premium video. Super easy to sign up. It takes like 30 seconds. It's super easy to access all the videos on your phone. They're just click to play. There's no login instructions or anything like that. Check that deal out this morning, guys.
Tensions have escalated between President Donald Trump and Ukrainian President Volodymyr Zelensky. On Wednesday, Trump labeled Zelensky as a dictator without elections and also blamed Ukraine for starting the war with Russia. In response, Zelensky said that Trump was spreading Russian propaganda. Earlier this week, senior U.S. and Russian officials met in Saudi Arabia to negotiate an end to the war. Ukraine was not involved in those talks. Zelensky has stated that Ukraine would not accept any deal unless it was part of the negotiations. Then on Tuesday night, Russia launched drone strikes on Ukraine's energy infrastructure, leaving thousands without power. Russia, of course, has denied involvement in that attack.
I don't want to say too much about what Trump said because you guys are going to get all worked up about it. But what Trump is essentially saying, I think in so many words, is that Joe Biden is crooked and he sent a bunch of money to Ukraine, right? And you can think whatever you want about that. In any case, this is something we continue to monitor as it relates to the wheat market. I've been told that if the war ends, then wheat will move lower, which makes no sense to me because prices have trended lower for more than 2 years while the war was ongoing. So why would an end to the war be bearish? I don't know. You tell me. Some people have said that if the war ends, then production of wheat and corn in Ukraine maybe accelerates. I just feel like that's probably going to take a while. I don't think that's anything you need to worry about like right now, this year necessarily.
The USDA mistakenly fired several employees helping with the bird flu response. The firings are part of President Trump's recent efforts to cut costs within the government. The employees, which included veterinarians and health technicians, are exempt from the layoffs. USDA is now trying to correct its mistake and rehire the individuals. The bird flu outbreak has impacted roughly 160 million birds and more than 970 dairy herds. The outbreak has also caused egg prices to soar, reaching a record high of $4.95 for a dozen large grade A eggs in January. That's more than a 50% increase year over year.
So as I mentioned yesterday with Doge and with these, firings and layoffs and termination of contracts, there's going to be some stuff that they find that's fat that needs to be cut that we don't need. And then there's going to be things that they cut. They're going to go back and say, wait a minute, we did need that. And this appears to be one of them. It sounds like they caught it pretty quickly. Throughout all of this, the one thing you've got to remember is that these are actual people losing actual jobs. So it's not like necessarily fun and something we should be cheerleading, but I'm all for cutting government waste. It just happens that this situation is not wasteful, I don't think.
The Federal Reserve plans to maintain its cautious approach to lowering interest rates. The Fed's January meeting notes revealed that it will keep interest rates unchanged until inflation shows further improvement. The markets are anticipating one rate cut this year with the possibility of a second. Officials remain concerned that Trump's trade policies could impact inflation, employment, and economic growth. There are also concerns that geopolitical tensions and consumer spending could drive inflation higher. The Fed's benchmark policy rate currently sits at a range of 4.25% to 4.5%.
Yeah, these higher rates are going to stick around for a while. These everything from wholesale to consumer inflation, just all the Fed's metrics are not really where they need to be. I mean, I wouldn't be surprised if they didn't cut it all this year. I know we're not expecting a cut in March. I don't know what's going to happen after that. People seem to believe that some of Trump's policies are going to be inflationary. That remains to be seen. But in any case, I don't know that you expect lower interest rates. I know that when we have Jim on Fridays, and Jim's an interest rate trader, he thinks some of the longer term rates are going to move higher, as a matter of fact, over the next year or two. What did cattle do yesterday?
Cattle futures were mixed. Live cattle were 35 cents to 75 cents higher. Feeders were 70 cents lower to 7 cents higher. Box beef was also mixed. Choice was down 188 at 313.89. Select was up 5 cents at 303.76.
US dollar's a little bit lower this morning. Stocks are off a little bit. Bonds are flat. Gold's up $34. Gold has been very, very strong as of late. Crude oil up 20 cents in the April WTI at 72.30. Have a great day, guys. We'll be back on Friday.